Welcome everyone to binary.com. This is the weekly live room starting at 8 a.m. UK time as always on Mondays. And in this session we're going to take a look at how I look at the market for my own trading and what kind of setups and currency pairs am I keeping an eye on and maybe not keeping an eye on for this week trading. Before we do that though, as always we're going to take a look at this PowerPoint, and one of the things we want to look at, for instance, is this disclaimer: trading for exchange and global financial markets in general are all considered high risk. Therefore, they might not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that and to see if it's suitable for you. This webinar, by the way, is for educational and informational purposes only. And by continuing watching this webinar, you agree with the disclaimer mentioned here. So, as always, I thank you for this for your attention on this important topic of the risk. With that said, though, we're going to continue and take a look at what I find interesting for my own personal trading. But if you are not able to watch this entire webinar, or if you cannot make it live at 8 a.m., you can register with your name and email at blog.binary.com/weekly trading room, and you'll get an email a few hours from now with the recording, and you can watch it anytime throughout the week. Today's goal, as always, we're going to take a quick look at the economic calendar, and then we take a look at the euro dollar, pound dollar, dollar yen, AUD USD, and XAU USD. So, with that said, apologies for the echo. It's because of the space that I'm at the moment in, and there's not enough furniture to get rid of the echo, so we'll have to wait just patiently for a couple of weeks until I get more stuff here. I expect it 2-3 weeks from now. So apologies for that, but in the meantime, I'll continue with explaining that we have on Monday Aussie and CAD news. Tomorrow we have Bank of England speaking. Wednesday we have Kiwi interest rate. That would be a big one. And otherwise, nothing really major, just like usual red tagged events. Last week, of course, we had a very busy week. The euro decreased its interest rate level from 0.25 to 0.15 to 0.05. And that was, of course, a big effect on the market. Not only the euro dollar, but the pound dollar too. The NFP effect was not so big. As you can see when looking at this daily chart on the euro, we had, for instance, here a smaller inside candle on the euro dollar. So not a big significant effect on the euro dollar during the NFP event. So euro obviously got a lot of downside pressure. The not so fantastic NFP figures didn't do so much for the euro dollar upside. All in all, when you look at the scenario, in my opinion, there are many bearish elements that support a downtrend continuation. First of all, the euro zone decreasing its interest rates from a fundamental point of view is very important for the euro dollar downside. But from a technical point of view, and that's what I want to focus on, obviously a big, massive bearish candle that happened on Thursday, like this one, is just a tremendous signal for downside. The candle itself is 230 pips. Now, if you compare that candle to all the candles prior to that, you have just a massive candle towering above all or below all of these candles. This is just a massive candle compared to all those candles. All these other candles are small. So a 230 pip candle like that usually does get a follow through to the downside, or if it's a big bullish candle, to the upside. In this case, down. So usually you get a follow through to that. On that. Other thing that you want to keep an eye on, or I'm keeping an eye on, is the fact that the close of that candle was very near the low. That means the bears were in control throughout the day and didn't lose control, on that day. So very bearish signal as well. Third point is the fact that we were already in a downtrend, and of course this is just an acceleration of that downtrend. So here you can see that downtrend in more full view, and we've been going through this week by week, and I've been basically saying that this is in a downtrend, and any retracements of this weekly candle could pose some potential for more downside. And yet again, last week's analysis was true that it provided a good downside trade. The same could be said for this week yet again. And all of these weeks, all of these bearish weeks, you can see were interesting trades to the downside. Any retracement of last week was actually a pretty good trade for downside. So, that scenario proved true, and we're continuing with this massive downtrend. We broke the 130 level, we broke the 131 support level. With those supports broken, we could expect more downside to, for instance, test 127.50. So, bearish, very bearish, a lot of bearish momentum as well, looking at this weekly, daily, and even monthly chart. And the break of the rising wedge, those orange lines are the rising wedge, is happening with full force. And that rising wedge, as I said last week, is part of a bigger wedge that is happening like this on the monthly chart. And we seem to have completed the last part here of the rising wedge of this contracting triangle. So that's why you're probably seeing so much momentum to the downside. So in that regard, in my opinion, if we then look at the daily chart, I'm looking for follow through to the downside, down to that 127.50 target, and after that 126.50, and after that 125, by basically placing a fib on this daily candle. And price could stop at the 38.2 fib at 130 for downside, or it could actually potentially even continue from lower. It doesn't even have to retrace that deep, and it could break a trend line like this, for instance, and then move towards lower targets like that 127.50, where we have a minus 618 target, by the way, at that same level. So breakouts or retracements from fibs seem to be the way to go here with the euro dollar, and I'm expecting some good follow through either this or next week on the euro dollar. Probably more this week, to be honest, because of that massive downside. So once price approaches 127.50, we'll have to see. It could be some bounce, maybe back to 130. That's difficult to tell. I have to take a look again how price is moving at that time. But in the long run, I don't think 127.50 is the bouncing spot. I think price eventually will break through that sooner or later, and we will probably be heading down towards lower targets, even testing probably eventually 120 in my long-term vision of the euro dollar. And maybe even after that, 113 and then parity. But of course, those levels are far away from now because price is just a bit too far to think about those levels. But just to give a rough indication of how bearish it could potentially become. Now let's take a look at the pound dollar, or the cable as it's so charmingly called. And we here too, of course, have bearishness in the market. Now, this bearishness even compared to, for instance, the euro dollar is even bigger. It's even stronger, I would say. And how can you measure that? Well, you can look, of course, like at a weekly chart, for instance, and you just see a massive weekly candle bursting through all these support levels at 164.60, at 162.50. All of those levels have been broken with an even bigger candle probably than the euro dollar weekly chart. Plus we had a gap here, gapping to the downside. So there is just a lot of momentum here too. Every week, every weekly analysis that we've been looking at was looking at a retracement of the weekly candle for more downside. And you can see how valuable that is as this downtrend continues. Last week too, and boy oh boy, we just had follow through after follow through here on the downside. The next support level is 160, which is a round number, and the bottom 158.50. And in the meantime, this has fallen 1,000 pips in the last few weeks. You can see it here, that basically the break of this trend channel is coming with a lot of force. So here too, looking for more downside, very bearish, especially looking at this acceleration here on the pound dollar is just looking tremendously bearish. And we'll probably see actually a retracement of some sort, but I wouldn't expect some deep retracement. 38.2 fib when fibbing the 4-hour swing high to swing low is probably all we can expect. Maybe even a 23.6 at the absolute max of 50 fib, but that seems quite deep. before we continue again to 160 and 158.50 here on the pound dollar. Now, we might not even get the retracement right now because it's just falling and falling, but obviously we've had so much downside that I'd rather wait for a bit of retracement personally before trading it, because otherwise I think it's a bit too much chasing the market, and in that case there could be the disadvantage of jumping in quite at the disadvantaged price. But I'd rather wait for a bit of retracement to these fibs, for instance, primarily the 23.6 and the 38.2 of that last swing high. And you can see that here we got a tremendous big acceleration of that downside within already a very neat trend channel that we had like this, but we just accelerated out of that for more downside. So if you look at that, usually speaking, when that happens, we get some good follow through. Actually, we could expect probably this bottom here to break 2, maybe 3 times, I would say, before that downtrend could potentially have signals of some completion. That's how bearish I am on this pound dollar personally. An acceleration like that, usually you get follow through, not once, but twice, sometimes even 3 times, sometimes even 4. But obviously it's difficult to tell. It depends on how price moves in the future. But 2 to 3 seems to be a decent probability for the pound dollar downside. So obviously when we look at both pairs, euro dollar and pound dollar are both looking very bearish in their outlook. In my humble opinion, the only question is when and where and how to capitalize on that, and not so much about what the direction really is. In both of these pairs, they look very bearish, and I don't see signals of that bearishness stopping anytime really soon. So that's the dollar strength, basically, against the euro and pound. Now let's take a look at how the dollar is shaping up against the Aussie. And here we see a totally different picture. The dollar is not gaining the same at all, actually, against the Aussie. And that has also to do with the fact that the euro odd and the British pound versus Australian dollar, the pound odd, are also pairs that are decreasing. So the euro and the pound are not only losing value against the dollar, but against the Australian dollar as well. And that's why we're seeing those trends, those downtrends in play. That's why we see the euro dollar, pound dollar moving down. But that's why we also see the AUD not moving down. It's kind of going sideways. If we look at the last 5 weeks, last 5 weeks, you see prices basically oscillating sideways. It's going kind of like in between these trend lines here, and it's just in a tight range. That tight range of the last 5 weeks is within a range of, let's say, the last 5 months. So there's a range in a range, right? A range of 5 weeks in the last 5 months. And yeah, price doesn't have any direction. Price doesn't have any momentum. It's just kind of randomly oscillating between 92 and 94.50, and then between 92.30 and 93.50. Nothing else. Very difficult to trade, in my opinion. Therefore, I'm waiting for a break of this zone. I don't want to burn my hands, let's say, figuratively speaking, on this pair. I want to see a breakout, preferably to the downside. If it breaks to the upside, I'm still a bit cautious of resistance above, and otherwise I'm just not trading it. I'm not looking much at price action signals, because all these signals are not getting a lot of follow through to any direction. Now the dollar yen is different. The dollar yen, you see the strength of the dollar against the yen as well. We had, of course, dollar strength with this tremendous momentum to the upside back in 2012. We had some follow through of that back in 2013 as well. Now we're seeing some of it in 2014 again. We had considerable consolidation zone here with the triangle, and here with a very tight range. But if you'll zoom in, of course, and look at the weekly chart, we are breaking out of that zone right here with good, healthy, weekly breakout candles to the upside. Now we did see some difficulties with pushing through the 105.40 top, and that's not strange. Obviously, a monthly top like that is something that you want to be cautious of, because price, even in an uptrend, could have serious difficulties with breaking that. So that's something to be aware of. Once it breaks out of that, above that zone, then we should have good potential to the upside. In my opinion, it does seem likely that a breakout to the upside will happen, but I am waiting for a bit more confirmation. Why do I think that seems likely? Because we got a breakout basically out of this trend line here. Two reasons. This is the first reason. Price is pushing through this trend line and looks like it broke that trend line on the weekly chart, at least it did right here. That's reason one. Reason two is just the fact that we're seeing pretty strong candles. So I don't think, you never know, but that's another reason for the moment that would support that a breakout is going to happen. The third reason actually is the fact that we had, of course, strong momentums prior to it. As I said, 2013, 2012, and even here as well at the very beginning of end 2011, beginning 2012 probably. So yes, that's another factor that says this breakout could be very true. One level stands in the way, 105.40, the top, but once that breaks, we could have space up to the minus 272 target at 111, and even up to the minus 618 target at 120, potentially. First things first, though, that minus 272 target is the first thing that a trader would probably want to keep an eye on before thinking even larger. So bullishness, yes, just like the other dollar pairs on the euro and pound. A bit more confirmation needed, though, that this break is real. Then we have the XAU USD. All right, we have the gold. We're looking at a break of this triangle to the downside, but the break hasn't gone anywhere at the moment. Price is stuck within the triangle between magenta and orange. We did get a break. That break hasn't gotten much follow through. It did break, pull back in, then continue a bit, but it didn't go anywhere before it's now making again a retracement. So we got to be careful. The break of that trend line here did happen, but not impulsive really. And what could be happening is kind of like a falling wedge here on the 4-hour chart. So that's not a good breakout scenario. So I'm still waiting for gold to give me more signals, whether it's bullish or bearish. 1240, for instance, or the 1320 levels are something to keep an eye on before maybe a better feel of direction for up or downside could be established on the XAU USD. Alrighty. Well, with that said, I'm going to thank everyone for being here, and we'll be back next week on Monday, the 15th of September. So I hope to see you then. Thank you all for joining. Very much appreciated. And if you want to register and take a look at the recording, any of these upcoming Mondays, blog.binary.com/weekly trading room is the place where you can put your name and email and receive the recording. So hope that you do that, so you have that option. And wish you all great trading and, of course, a good week as well. See you soon, and cheers.